What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for about 6 years now. I've been with the chart guys for about 5 years, heading up the futures room and the swing report, along with Dan, Laurie, and Funk. In this video, we're going to be looking at some updates for some of our recent trade ideas. So let's get into it. So, starting off with our first pick with, not our first pick, but with the first idea was KMX. So KMX, if you've seen any of the recent videos, recent weekly videos, these videos, then you will recall that we hit the KMX setup a couple times already. And those were both session to session setups. So it was these two setups, and unfortunately, neither of them stuck. So although they both were picture perfect setups, and we got both of these 2.48 and 2.5 multiple trades were profitable, the runners on those positions were ultimately stopped out over here on this high. Now, and so for the alerts or whatever, if you were trading along with these session to session setups, then we just stopped out of it. But if you are one of our subscribers who does longer term stuff and doesn't really care to be a bit more active, then actually you were better off this time around. I mean, it's always a matter of like what you prioritize, right? So if you are more active and you are trading along with these session to session setups, then certainly you have a nice piece of candy to go home with, so to speak. But if you were just a bigger picture kind of a scale-in trader, you trade these zones to a T, well then you actually fared better. You probably fared better than us because KMX, as I said in the updates, which go out to our subscribers, as long as the this structure is resistant, then this original trade zone remains valid. So we sent out updates. There was one more update, I believe, for a setup in here. So we did have the potential to capture that. And we sent out the alert before the earnings. It was actually on this day we sent out the alert to say, okay, well, earnings is coming up. And so I think it was the Friday before the weekend, and we were already at the support, and we had seen 5 days or so of selling. So the alert that went out said something along the lines of very reasonable place to take profits, especially with earnings coming around, going into the weekend, blah blah blah. And then before earnings actually came out, we sent out another alert that said, okay, listen, this is the last call. Earnings is coming up, and if you want to hold through earnings and for that just eke out that little bit more of gains, then you have to be sized appropriately, right? You don't want to hold a full position through earnings because you never really know. This could have very easily been a gap up instead of a gap down. So congratulations to people who did take this setup longer term and position appropriately to hold through it. But if you didn't, totally reasonable to have just stepped out of this trade and then look to reset a little bit here. And so now we know that these buyers will create no change without getting back over here. So the step number one for these buyers would be to get back over 76.43. If they can't get back over 76.43, then these buyers create no change whatsoever. Okay, so this is at this point now, if you're still looking for a sell, you want to see some buying first and then look for a potential daily lower high to be set under 80.13. And again, ideally, we will not see any break of 76.43 if you're still in any kind of runner from these sells. So from a session to session perspective, what you'd like to see now is value move higher for a few sessions. And then as long as it doesn't break this 80.13 and ideally doesn't come over 76.43, if you have value move higher for a few sessions, and then you have a situation where value has the potential to move lower, just like these two setups, and you can review those old those videos from the prior weeks to get an idea of what the session to session setup is that I'm talking about. And Swing Report subscribers, we have an educational video for that. I think I've uploaded that one. I'll make sure after. But that's pretty much it for KMX. And the next one, we have XOM. So XOM, I will include a snippet of the idea for the follow-up. But first, let me just update you if you are still in a runner. So this was the original trade zone. It already got to our target. Last week, I believe we suggested that no lower than here for a stop if you still have a runner from the trade initiation from down here. And so now that we've seen a higher high break into all-time highs, kind of lacking a little bit of follow-through, it's reasonable to be walking your stop here now. If these buyers are going to remain in complete control, they should hold over this little 4-day balance here. There is still space to set a potential higher low over 114.60. And it's notable that they 116.73 that they just closed the gap and couldn't find acceptance back into this range. So if that continues to be the case in the future, Monday or whatever in the following week, then it's reasonable to be looking for a higher low play from a session to session setup, such that if on Monday we had an open, say up here, it would be reasonable to be looking down here, bottom fishing off of this structure, and then trying to come back up here as the first target. So something along these lines would be pretty reasonable. Risk would be pretty low for that. Something like this would be pretty reasonable for XOM, assuming we get an open above the value area high. Okay? Even if it's like right above the POC, it's still reasonable, but I'd probably prefer like a pass back over the open play instead. So like that would look like this. Let's say that you have an open right here, right at the POC. You drill deeper, but let's say you can't take out this little intraday balance, you can't take out this low, then you pass back over the open. You can buy that, pass back over the open, and throw your stop over here looking for the same exact target. Okay? And that would essentially be for a daily higher low play. Right? Because if value moves higher on Monday, then this daily higher low is probably set here, and just be looking up at key resistance, all-time high resistance, 120.70. And I will include a little bit of an idea from, I think, 3 weeks ago. I forget which week, to be honest. I'll have to go back and edit it in. But the idea was we were prepared for this. I don't think I mentioned it last week, so I should have updated it. That's my mistake. But the week prior, or 2 weeks prior, we were talking about the idea that if you had no position and you wanted to get a little bit late to the party, I think is how I phrased it, then you were looking for a potential back test of this structure and this structure, which is essentially what happened here. So just an example of like, it's not that I'm trying to suggest that I knew that would happen. That's not what I mean at all. But what I do mean to suggest is you want to be prepared for the most ideal situation, right? Like if they were going to continue to stay in control, what should that look like? You should always have all the different potentialities laid out. Like if you're in our, if you're a subscriber to our Slack room, then you see me do this every single day, trading the futures, trading the open. I leave myself open to trading to all the potentialities, and I'm very often trading one contract against the other. So I'll be like long the NQ but short the ES. Like in that kind of a situation, probably the NQ is really strong and the XLV and XLF are lagging, dragging on the ES. So I'll be long the NQ, but I'll also be short the ES, because if the NQ joins XLV and XLF in weakness, then I want to stop out the NQ and then continue riding the ES. So you just want to keep an open mind to all of these potentialities and chunk this information. Like, no, price can only go up, down, sideways. So if you understand that it can only go up, down, and sideways, then it becomes a matter of if it's going to continue up, what should it look like? If it's going to continue down, what should it look like? If it's going to go sideways, what should it look like? So if it was going to continue to go higher from this sequence, then this little bit of balance has to hold, because this is balance, this is breakout, this is breakdown. But if you can't take out the next area balance lower, then these buyers are okay. And lo and behold, they did not, and so these buyers are still okay. So anyway, I'll include the snippet at the end of this video. And that's pretty much it for XOM. For Oracle, this one, obviously we hit this twice. So if you still have a runner, and those setups were here, both of these setups worked quite well. And so anybody who's still in a runner, your stop should be no later than 114.70. Ideally, you've already taken profit and are risk-free on this, because you never really know. You just never know how it's going to shake out. If this structure, it does support price, it wouldn't be too surprising for us to see another test of this area up here. So definitely take your profits if you have them. And yeah, throw a stop over 114.70. Now, Oracle next week, it's reasonable to be looking for a session-to-session setup, right? Because this is potentially another daily lower high being set here under 114.70 at 107.37. So the odds of this daily lower high being set will be pretty good if next week we get it open under this session. And then let's say we open up here and then we cannot get over the POC, or we cannot get over the value area high, fall back under it. That's going to be pretty good indication that that daily lower high is set. The more acceptance that we can find under the point of control, and ideally under the value area low at 105.69. Okay, so something like that, very reasonable to be looking for something like this. It's going to be the same thing as last time, pretty much the same exact concept. Don't need a lot of tricks, just need a few very effective ones. Something like this makes a lot of sense. And then we can look to hold a runner, because if this is going to be a daily lower high and they do lower low, well, it's pretty airy here. There's not a lot of volume here. So if you lower high and lower low, probably 101-ish, 100, 98, 50, and then really picks back up here, 95. It's not out of the question at all. You could very easily just crash through this low volume area. It happens all the time. It happens very regularly. I mean, for example, here's a big old gaps. I mean, that was because of earnings, but the idea is when there's very little volume traded in an area, it's easier for price to move through it. It's like the path of least resistance. It's no different than, physics, electricity, right? Um, Anyway, that's it for Oracle. And then finally for CRM, here was our original trade zone. And if the buyers were going to stay strong from here, they should have held over this structure. So this is not a good look for these buyers. And I believe last week what we were talking about was for the potential of a higher low play if these buyers can make space for it, and they have not done so. So in fact, CRM is actually a pretty good candidate for, just like many of our other ideas, it's a pretty good candidate next week for a session to session play, right? Because if value has the potential to move lower next week, let's say we open up here, and then let's say we rally up to the point of control, or don't even get to the point of control, and then roll back down under the open, right? Well, then that's probably this daily lower high being set here, because if these buyers can't get back over this point of control at 203.40, which is pretty much the same point of control for all four of these sessions, so there's a lot of volume traded there. If the buyers can't overcome this point of control on Monday and then crack under this value area low at 202.10, that's pretty good odds that that daily lower high has been set. And if that daily lower high is set and we lower low, they should be trying to come down here. Okay, so something along these lines makes sense as well. If you get a lower open, something like this. Nope. Something like this, try to get there first, and then as an extended target, you're trying to get back to these highs next. Okay, so something like this makes a lot of sense. All right, so that is it. I will include that XOM snippet in the end of this video. And I appreciate you guys sharing some of your time and energy with me. And just a reminder, these are just some of the updates for some of the ideas. If you want to get all of the information, Dan updates, Lori updates, Funk updates, ideas from them, regular live updates for all of these trade ideas throughout the week, access to educational videos, then check out this swing report. There's links down in the description. If you wouldn't mind giving us a like and subscribe if you're new around here, I would very much appreciate that. And again, thank you for sharing some of your time and energy with me. I appreciate it, and I hope to see you soon, ideally next week. Another one of our recent picks, and it's already hit target. And I think this is a pretty reasonable, like, if you're in the runner still, then your stop is just under here. If you have no position, a little bit late to the party, then it's reasonable to wait for this crack here, like get over this guy, and then look for backtest plays off of this structure and off of this structure to see if XOM can follow some of its other peers who are already broken up into all-time highs. Like I almost gave away the pick. Well, I guess it doesn't matter, not so much right now. Like MPC, our pick from last week. And also, I think Hess is like flirting with all-time highs already in all-time highs. And I think PSX is flirting with it as well. Flirting with it, yeah. So I think that's a reasonable idea for XOM. Just be patient here. Look for the back test after they get back above. And again, if you're in the runner, then you're just sitting pretty. Or I should say, if it's not the worst thing in the world to walk this stop up to like here if you want to be protective of that runner. But if you've already taken off profits at target and the first first update for profit taking was like somewhere in here, so if you've already done so, then I think it makes sense to just leave it here and see how much the market will give you. Okay, because your position's already paid for it. Moving on then to KLAC.